Is Bitcoin actually safe? Most people think Bitcoin is either a digital gold mine or a ticking time bomb. But the truth is, it's neither. It's only as safe as how you use it. The part no one tells you is that Bitcoin safety isn't one thing, it's two. There's the tech side, how secure the network is, and the money side, how risky it is to buy or hold it. If you mix those two up, you'll either trust it too much or fear it for the wrong reasons. By the end of this video, you'll know exactly how safe Bitcoin really is, why the network has never been hacked, and how a simple $50 a month plan can make your Bitcoin journey a lot safer and less stressful. Let's break this down from the start. When people hear the word safe, they often think no risk. But in Bitcoin, safety means something different. It means the system works exactly as it's designed to, even when prices crash or people make mistakes. Since it launched in 2009, Bitcoin has never stopped running. Not once. No downtime, no system-wide hack. It's processed billions of dollars in transactions, while governments, banks, and tech companies have had outages and leaks. How? It all comes down to proof of work, which is the system that keeps Bitcoin alive. Miners compete to solve complex puzzles with computers. That takes real electricity and real hardware. The first one to solve it adds a block of transactions to the chain and gets rewarded with new Bitcoin. If someone tried to hack Bitcoin, they'd need to control more than half of all the mining power in the world. That's hundreds of thousands of powerful machines and enough electricity to power a small country. The cost would be massive, and they'd have to keep spending that money every second. Attacking the system is far more expensive than using it honestly. That's the genius behind Bitcoin's design. Now here's the part people don't always see. Bitcoin is decentralized. It's not stored on one company's server. It runs on computers all over the world, from Tokyo to Toronto. If one goes offline, others keep going. There's no switch to turn it off. Even when China banned mining a few years ago, Bitcoin didn't die, it just moved. Every line of Bitcoin's code is public. Anyone can read it, test it, or suggest changes. But nothing changes unless thousands of users, miners, and developers agree that slow process can be frustrating. But it's what keeps the base system stable. If we're talking about pure tech safety, Bitcoin's record is unmatched, 16 years. No core hacks, no counterfeit coins, no system-wide failures. But if the network is so strong, why do people still lose money? Because the weak spot isn't the code, it's the user. When someone loses Bitcoin, it's usually from clicking a fake link, trusting the wrong exchange, or forgetting their recovery phrase. That's why Bitcoin's biggest lesson is personal responsibility. Once you send a transaction, it's final. There's no undo button. Now, let's talk about what scares beginners the most. Price swings. Bitcoin is volatile. It always has been. It can rise or fall 10% in a single day. Over the years, there have been times it lost half its value, then recovered to hit new highs. Here's the key to staying sane. Volatility doesn't mean danger. It means freedom. Prices move freely because no one controls them. There's no central bank that can print more or freeze trading. You can buy or sell anytime, anywhere. The real risk isn't Bitcoin itself. It's how people react to it. When the price shoots up, new buyers rush in from fear of missing out. When it crashes, they panic and sell. The problem isn't the market, it's emotion. So how do you make Bitcoin safer for yourself? By creating a system that works no matter what the price does. That's where dollar cost averaging, or DCA, comes in. This is when you buy a fixed amount on a set schedule. For beginners, $50 a month is perfect. You buy the same amount whether Bitcoin is high or low. Over time, you get an average price that smooths out the ups and downs. To get started, pick one well-known regulated exchange in your country, create your account, and finish the identity check. Turn on two-factor authentication using an authenticator app. Then start your $50 monthly purchase and let it run. When your total amount gets bigger, say between $500 and $1,000, think about moving it off the exchange. That's when you buy a hardware wallet. A hardware wallet is a small device that keeps your Bitcoin keys offline. Even if your computer gets hacked, your Bitcoin stays untouched. When you set it up, you'll get a list of 12 or 24 words. That's your recovery phrase. Write it on paper, keep 2 copies in different safe places, never take a photo of it, never store it online, and never tell anyone those words. If anyone asks for your recovery phrase, they're trying to steal from you. No real company or support person needs it. Once you've been buying regularly for 3 months, you'll see 2 things happen. First, you'll stop caring so much about daily price changes. Second, you'll start to understand how your own emotions react to risk. That awareness is worth more than any short-term gain. This process gives you control. You're not relying on anyone else. You're building your own system of safety. Bitcoin itself doesn't promise returns. It promises rules that no one can change. There will only ever be 21 million coins. Governments can print money, companies can dilute stock, but Bitcoin stays fixed. Still, safety doesn't mean can't lose. If you invest money you might need soon, you'll stress yourself out. Bitcoin moves in long cycles. Thinking in years, not weeks, is how you stay calm and consistent. Start with $50 a month. Learn how wallets work. Back up your keys the right way. Over time, you'll have both a stronger understanding and a safer position than most people who jumped in blind. If you follow one rule from this video, let it be this: small, steady, and secure beats big, risky, and rushed. What has been your experience with Bitcoin so far? Let me know in the comments below. And don't forget to like and subscribe while you're there.